Liquidity is euphemistic with confidence. That's all it is. It's confidence. You didn't have liquidity back in 2008 because there's no confidence, there's no trust. Now you have tremendous confidence. That's all it is. When you're talking about liquidity, it's just about confidence in the future, and that's reflected in the market multiple. And they move to extremes. If this was just about earnings alone, the stock market would be a lot lower than it is right now. It's not about what earnings have done, and you could argue earnings have been fine. They have. But there's a massive delta between the fundamentals and where the market is because of the exuberance that's evident in the expansion of the market multiple. Now, if the multiple was 18 or 20, I'd say that's fine. But the forward multiple is 23. You look at price to earnings, you look at price to book, you look at price to sales. Price to sales is actually the 3 standard deviation event. There's no valuation metric that isn't saying that we're not in a bubble. And you can't time when bubbles are going to burst except to know that you're playing on borrowed time. And I could be completely wrong. Maybe this is a 2027 story. I think that would be unusual. I think we're in the late stages, not just of the bull market, but I think we're in the late stages of the bubble. And these don't tend to end well. And it's always very difficult to isolate what is the piece of bad news going to be.